Happy Friday morning, everyone. This is the live stream with my colleague Daryl and I, where we're going to cover analysis, reviews, research on stocks, looking at stocks from a fundamental perspective as well as a technical perspective. This is a very interesting day. I think later on I could let Daryl talk about a few things that are happening in the options market. Overall, this week, and if I can include last Friday, we've seen a lot of volatility. We've seen some stocks really sell off and beginning to bounce back. But over the past 5 trading days, we've seen stocks like uh, Broadcom really sell off, AMD. Micron had a fabulous day yesterday, but it's still underwater. If you compare the 5 day, you have some other stocks deep in red, and a few stocks did make it through, kind of avoiding being sold off over the past 5 trading days. But yesterday was a good day. It really was a bounce back day for semiconductor. Google and Meta had a good day. Amazon had a good day. And we'll see if that keeps going. It's supposed to be a positive opening. Last time I took a look, it looks like just a tiny, tiny rally on the S&P, and the NASDAQ is supposed to be up a little bit. But we'll see. It really takes a couple hours for me to be convinced where we're going. And even yesterday, when I look at yesterday's trading, it was a day where it traded much higher than where we ended up. So it was trading quite high, kind of after about an hour and a half, 2 hours into trading. And then it kind of went all over the place. So it wasn't a convincing kind of rally. I think there is a lingering concern that, hey, maybe we have stock prices a little too high. The AI trade is beginning to get minds to wonder of the possible, hey, maybe this thing's going to slow down. And when the music stops, who's going to lose? And maybe it keeps going higher. We'll see. I think the spend is still set. A lot of these businesses are going to keep spending into AI, but we'll see when the music does end up stopping. I think it will stop, but I don't know that it's going to happen in 2026. I don't know that we're going to have some kind of correction in 2026. But I think in the future, 27, 28, 29, I think we'll have some sell-off happening just to kind of correct where the market had the AI trade wrong. The market doesn't have it completely right. I'm sure some of these businesses are going to do great over the next 5 years, but some of them are not. And the market's going to have to figure out, okay, which ones are the winners, which ones are the losers. So how are you doing today, Daryl?
Doing wonderful, Victor. It's good to be here.
There we go. Perfect. And I think you had some comments you were sharing with me around the quadruple witching day. Let me turn it over to you to talk about that.
Okay. Well, where'd it go? There we go. So quadruple witching day is an options day where index options, single stock options, index future, and index future options all expire at the same time. So the futures, the Dow, NASDAQ, small cap, Russell 2000, etc., all those indexes that we look at, those are based on contracts 3 months ahead of time. So they'll change from December the 19th. We've been looking at the December 19th options for the last 3 months, and they'll shift to the third week in March. After today, we'll start looking at those options. So anyway, we have 4 of them expiring this Friday. And there's a total of about $7.1 trillion is expiring today. And I looked at a handful of stocks that are requested quite frequently. And you can see where the max pain sits. So what this means is you have call options, you have put options, and you have those that are in the money. So what price would the stock have to be at to where they could pay out the minimum amount of payments on those options? For NVIDIA, for this Friday, based on data from the 16th, NVIDIA would be 126. Now, they're not going to drive the price down to 126, but the directional change for all of these, NVIDIA, Meta, Broadcom, Google, Micron, Netflix, and AppLovin, are all to the downside. And we've already had some sell off in some of these this week, but the direction is going to be push it down if they want to minimize their options payout.
Mm-hmm.
So anyway, there's going to be a lot of volatility today because it is quadruple witching day.
All right. Well, that with the name like that, the quadruple witching day should land on Halloween, but instead
It should happen about 4 times a year, every quarter.
All right. So, so we have a couple of stocks in mind that announced this week on the stream. We have Nike, FedEx, and Micron that we wanted to do a deep dive in, and we wanted to collect requests. If there's members out there and you want us to look at a stock, please put it in the chat and we'll cover it. If you're not a member and would like us to look at a stock, buy a $5 super chat and we'll review your stock. And while you guys think about the stocks you'd like us to take a look at, we'll get started. We'll get started with Nike, which is having a tough morning. It's like the morning you wake up with a cold, you have congestion, you got that headache going. You feel like, oh no, here's going to be a couple of days of misery. Here we go. That's what I think Nike is feeling this morning. It's down 10%, and this stock has been down. It's been down 15.86. I thought it was going to be worse, but it's not. The 5-year is terrible. Over the 5-year, this stock has really just been a train of losses, just continues to go down. Now, Nike is a really valuable brand. It's everywhere. The Olympics are coming next year. I'm sure Nike's going to be everywhere and be a major advertiser partner with the Olympics. The stock is sold off 53% over the last 4 years. Is it an opportunity? Right? And I look at good companies and I'm like, well, at some point, this thing can turn and it can go from 65 back to 150. And if it's getting ready to do that, I would like to know that. So let's research Nike, try to figure out, is that possibly the situation we're in, or does it need to kind of continue to operate and prove to us that it's ready to do that? This is a $97 billion market cap stock. It's a pretty good size, not gigantic. $46.5 billion of revenue. It is a big company. PE ratio is high. For a business that is struggling, paying a forward PE of 34, it's out of the gate, looks expensive. I'm like, well, why am I going to buy a struggling business for a forward PE of 34? How about a 12? How about a 10? I like buying struggling business at a very low PE ratio. But let's carry on. Maybe some other things are going to change my whole perspective on it. Analysts think it's discounted. All right. Now let's take a look at what they announced. See if we have the quarterly set. Now the revenue wasn't all that terrible. They did guide that next year revenue is going to It's going to be a struggle. One more year of struggling revenue growth. Now Nike's big and it has a few new competitors. I would say 10, 15, 20 years ago, its competitors were primarily Adidas and maybe Under Armour. Under Armour is making some waves in the footwear market. Nike's predominantly a footwear company, but they do a lot of apparel. They do a lot of Nike apparel, athletic apparel. They're getting into what Lululemon does, which is the whole, you know, leggings kind of market. So that whole thing, Nike's brand really works in those areas. Now, it's not growing, but it's not contracting. That's really, I think that's a positive, but it's not enough for me to say, oh man, the worst is behind us. No, it's not. And you see that in the trailing 12 months, it's been tough. We look at the annual. Now, back in the good old days, which was COVID, and the government was like, hey, everybody stay home and we're going to send you some stimulus checks. Well, the consumer was like, okay, so don't have to spend money on gasoline. I don't have to spend money, uh, maybe doing dry cleaning because I'm sitting at home on Zoom all day, going to meetings. I've got a little extra money left over. And the government's sending me stimulus checks. I got some good discretionary money in my hands. And I think I want a new pair of Air Jordans. Boom. Lot of buying of Nike shoes back in fiscal year 2021. And people wanted to be comfortable at home, right? I'm sure a lot of business people that were accustomed to going into the office, putting on some nice leather shoes to look right in the office, all of a sudden, hey, you got to stay home for the rest of the year, and really for a couple of years. They were probably like, well, I could probably use a new pair of Nikes. And behavior really changed overnight. And it was a benefit to Nike because just a lot of factors helped them. Now, the good thing, the good days didn't last forever, and it began to really unwind. And now they have these compares that are quite tough, but they're getting better. And they don't have a big, you know, uh, economy or factor in the economy that's going to help them. It's like, okay, we have a regular economy. The consumers out there buying stuff that they like. So now they're just going to be back to normal days. And I think that's where we're at. Looking at the trailing 12 months, let's see how their cash flow has been growing as well as their profitability. Cash flow, as you can see, the high point back in 2024, they had a pretty good cash flow rate, but it's been coming down. They're probably making investments in their warehouses and their operations and so forth. Their gross margin is in the 40s, but it's lost, 300 basis points. It's gone from nearly 45% down to 41%. So that's not a good sign. That's the wrong trend. We want it to be growing, not contracting. Profit margin, same thing. So it's like, man, Nike's looking like a sick puppy. Yeah, that's why it's selling off by 10%. You look at this stock and you're like, this confirms they're just not doing well. And can we see some light at the end of the tunnel? Can we look through the tunnel and go, how big is that circle of light? Does it look like it's a mile away, 500 meters away, or maybe just like 100 yards away? Well, let's take a look. Analysts think there's 25 of them covering it. And I would say that Nike does have a strong enough brand where a lot of investors are influenced by the strength of the brand and probably saying, man, this is a probably good opportunity to buy a legendary company. And I respect that the brand has a lot of value and equity. Totally get it. But it's also dangerous to kind of go down that road because it it starts to influence how we think about fundamentals. So I'm going to try to eliminate that from the conversation till the very end and say, and some soft kind of benefits or, some soft kind of assets they have is their brand. So I'll say that for later. Now, the future does look, according to analysts, and a good number of analysts are covering it. Future does look good. Growth, 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 and growth. And they are, going through a painful process of trying to get their business sorted out. What is working for Nike? Where are the best markets we have? They had a change in leadership. I think the new leader is good. He knows Nike. He knows the footwear industry. Now, how much pain before we get to the promised land of 5% growth? How much longer do we have to wait for Nike to come back? So the quarter they just closed is this quarter. Very little growth. They're guiding that their growth is going to be not very good, but maybe they're just kind of sandbagging, saying, hey, guys, we're not going to do very well. So they can come back and go, hey, we did better than expected. We're actually going to grow 3, 4, 5%. So this is beginning to look good. Okay. This is beginning to look good. This is the quarterly view on stock analysis. You can view it annually, right? These are the future years. The revenue is being forecasted for their fiscal year ends May 31st. And it looks like the future years look good. If they could operate their business and get to this type of growth, I would be interested. And if they can get their PE ratio down to the teens, or we're going towards Nike being in the teens, I'm very interested because I don't think it's going to end up in the teens. I think it'll be in the low 20s, but the stock price would rise. So we are currently in this fiscal year, May 31st, 2026 is the year-end close for the fiscal year 2026. So we are, I'm going to call it 5 months from this finish line. And then we're going to start this fiscal year. So this stock, I'm thinking I'm going to keep an eye on it. Next quarterly earnings that comes in 3 months. Really important for them to show, hey, are you making strides towards getting to this growth? Are things beginning to really stabilize for you to have a good position to grow? And if they start positioning themselves for growth, then it really becomes, for my book, an investable stock. Right now, it's still in that, we're still figuring things out. We're still fixing problems, and we will soon be in a position to grow. So that is good. Let me kick it over to Daryl to look at the charts, and then I'm going to update my valuation on Nike. Before you get set up there, wow, look at that chart. I look forward to your comments. Let me say hello to Benton. Good morning, Benton. I hope you're having a nice Friday morning. Paul, good to see you. 10% prediction in the first half of 2026. Do I see this happening? Okay, we're going to get through Nike, and we're going to come back to this question. I think we could have a nice conversation piece around, can we see a 10% correction? Or is that in the cards? Well, we got Benton praying for PayPal. I mean, not a lot has worked to help the PayPal stock. So you know what? I might join you in praying for PayPal. Maybe that'll work. So they have good fundamentals, but the market's not buying them. What the heck? Amazing, huh? All right. So I'm gonna come back to this comment once we're done. Oh man. Now you're giving me ideas. 2026 Outlook stream. You know what I'm thinking is I wanted to do a marathon stream as we approach the year end, and maybe I'll bake it into that. So thanks for the idea there. All right, enough of a delay. Let's kick it over to Daryl. This chart's looking pretty interesting.
Yeah, whenever we talk about Nike, I always go back to this chart. This is a 18-year trend channel, so basically going all the way back to 2007. And we've connected a trend line to 4 tops. And we had one time when it got above that channel, but then I just make a copy of that and drag it down to the bottoms. And I could actually probably move this up and connect more bottoms, but that would just make it look worse for Nike. So I'll leave it like this since I've had this chart for probably 3 years. And every time somebody brings up Nike, this is the first thing I typically go to. Because when you fall out of a trend channel like that, there is some serious problems that you have to start addressing and worrying about. So I have found Nike somewhat uninvestable at this point. And if we go back 3 years, I was saying that even back right here. So that's what I had been telling folks. So now we'll go to a 1-year chart. Actually, we'll look at 15 years first. So I putting an auto support and resistance line about right here. So it came down and tested it, actually broke below it here. It was resistance in 2017, resistance in early 2017, and they had a little breakout here. But this is probably the best line I can see for what I would consider support at this time. So now we'll step into maybe just 5 years because I want to get a downtrend line on here. So I'm connecting to these highs we saw here, connecting it to this point, to about right here, because it's been battling that line. So here we have a trend line going all the way back to 2021. So we're talking 4 years. And we can see what's been happening. Every time it comes and tries to get above that line, it lasts for less than a month or so. So there's probably 3 weeks. There's 1 week, maybe a week and a half. It's going to try it again. So let's zoom in a little bit more and see where we are now. So it is trading below a downward sloping 200-day. So the 200-day is tracking along with that downtrend line. We have a 5-day that is moving higher, and it's actually been oscillating a little bit, but we do have higher highs over the last month, and we have higher lows as well. It is trading above the 21-day EMA, and the 50-day is down sloping. It's currently trading between the 50-day and the 200-day, and the 50-day is below the 200-day. So that's a death cross there. We did have a lot of volume going into yesterday's trading, and it was a down day. The PPO, we'll stay with the RSI. The RSI is sitting at 51. I can see since they had this peak here in August, they broke above the 60 line, but the last 1, 2, 3 attempts they've had to get above that 60 line, it's been rejected, and the momentum turns back down. and it's not holding support at 40. When it goes to the downside, it moves into oversold territory. The PPO is positive at the moment. The accumulation is at a 52-week low. We are sitting at a year, so it's at a 52-week low. And its performance to the S&P 500 relative performance is almost at a 52-week low. It is performing somewhat better than the footwear industry group. Nike is underperforming the discretionary sector by 19%, and it's underperforming the S&P 500 by 24%. So I'm leaving this one to someone else. I'm not going to touch this for a while. It would need to break above this trend line before I even think about getting interested.
Yeah, I'm with you. I'm with you. When I look at the fundamentals on Nike, it's just not ready. I updated their whole valuation. Their cash flow is really down from where historically it's been. And Nike doesn't have consistency in its cash flow. It has some really good high years, and then it's got some really low years. And this is like the best data we have on the current year. Um, if they could get back on top, and that's harder to do than you would imagine, because they're a big outfit, right? And their shoes are, I would say, a little pricey. And maybe the consumer is like, I'm, not going to buy Nikes. I'm just going to buy, some other label, or, um, just have alternatives for their footwear. Now, if they could prove they can grow, that'll change their valuation. But for now, the stock is priced too high. Its cash flows are not worth its current stock price. Their cash flows would be come up 15% short of its stock price. And even when I use their earnings per share for the next fiscal year, which would be basically a year and a half ahead, because I always like to look a year ahead. In this case here, I'm going to go a year and a half. I go with a PE of 18, and I expect from that point they'll grow their profits by 20%. I still come up short by 17%. So this one here has to, they have to continue to improve, or their stock price is going to keep coming down. I mean, the stock price for Nike, the trend is that, hey, it's just not a very desirable business. And maybe if it got down to $40 a share, $35 a share, then maybe then it might be interesting. Because a couple of things, right? If we wait a quarter or two, maybe Nike does get priced down to $40 a share, $35 a share. And at the same time, it starts to improve its business and its fundamentals look better. You have that combo of lower stock price, better valuation. Now we're talking. So I think we're going to need to wait on this one. I'm going to wait on it. I think Nike is a pass. It would have been a sold a long time ago. And I'm going to take a peek to see which super investors, famous investors, these guys get paid by their investors to go find the best companies to invest in. And in this case here, investors took money to Hillman, Terry Smith, Viking, Oldstein, Geiner, Jensen. These guys here, they gladly paid 1% to 2% management fee in order for them to buy Nike and have them lose a lot of money. So you paid them 1% to 2% to enable you to lose 16% on Nike. All kidding aside, again, Nike is a brand that is going to get a lot of attention, even this professional investor attention. And maybe professional investors got to take a peek at the fundamentals, which look terrible. It's a contracting business, not very good margins, and so forth. So that is Nike. That's what's happening with Nike. Let's catch up on chat. And I wanted to tackle are we going to have a correction in the first half of 2026? Before that, let me see here. So I think I left off. So Benton, yeah. And I don't know that we have a craze in the making. I'm not an apparel guy, but I don't know. Maybe some TikToker will get super famous and get a craze going. Falls Grave pointing out that Uber has been under pressure. I agree. That'd be a good one to look at. I put it on the list. We can look at it later, see what's going on with Uber. And basketball is going to make a comeback. Now, I would say that I did enjoy the NBA Finals last season, and now we're having another season. So we'll see. We'll see. Good morning, Dwayne. Good to see you. Dwayne's got a sneaker on his logo, on his profile. Maybe Dwayne ought to be our in-house apparel analyst, guy who can speak towards, what's cool out there in apparel.
He was probably just cussing me out.
What's that?
He was probably cussing me out when I was talking about the chart. Our
Mike
sneaker
this. Let's mark this on watch list. Yeah, I think so. I think Nike down the road, again, if they improve their business, if they can get their business to grow, I think we got something. But no growth, you were just going to bump along the bottom. If they can recover and start growing, yeah, maybe in 6 months, the picture will begin to turn. We want to get into these stocks, kind of once we confirm the business is improved and the market's beginning to notice, and we can just get some shares, get an investment, and then see these stocks go up in value. That's the intent there. All right. And then Mike, remember, so you had a good run with E.L.F. Very good. All right, I put that on there. We'll take a peek at it. All right, so I caught up on chat, and I want to come back to the question. I guess since there's some chatter out there, and okay, several people, 10% correction. Now, there's the immediate thought that comes to my mind is there's always people on the business channels, that are perma bulls like Tom Lee. I mean, the guy cannot, he just always kind of is on the side of this is why the market's going to rally higher. I like Tom Lee. I think he brings some really strong research at times. And then there's some opposite to that. You have some talking heads that will be like, oh, we're going to sell off. And I think they may believe that, but it's also a way to get attention to that particular conversation. Now, what's my expectation for 2026? Just putting it out there. I've said it before on the streams is I think we're going to go higher. And my sentiment is the economy is good. We have the consumer is going to receive more from the government in the form of stimulus, potentially stimulus dollars. I think there's rumblings that there may be a stimulus check coming. There's going to be income tax returns are supposed to be much higher. So the consumer is going to be okay. We don't have an unemployment problem. Unemployment's okay. It's not a big problem. That's going to be okay. We have lower interest rates. And what's been good is recently we've had a lot of these high-flying AI stocks go down in stock price. And I think that's good as a setup toward 2026. We're not going into it with super high stock prices. I still think some of those are still too expensive, but they're not as expensive as they were, let's say, a month and a half, 2 months ago. Having said that, I would say that no, we're actually going to go higher. Can we see a nasty correction like in 2022? We most certainly can, but I just don't think it's going to happen. I think we're going to go higher. And a 10% correction, we got there this year in March, April timeframe. We did have a 10% correction, but that correction was met with a market that just bought up the shares of stocks that were trading lower. So, can we have some volatility in 2026? Most definitely. I would expect so. Maybe give us opportunities to buy into stocks. But I think we're going to go higher. I think we're going to go higher in 2026. So that is it. Looks like Daryl might be having some internet challenges, and I can't let him weigh in. But maybe when he comes back, I can ask him this question. All right, let's take a peek. Oh, here we go. Daryl is back, I think. Are you there, Daryl?
I don't know what happened. I seem to have lost the internet for a few minutes.
Man, okay. Well, we got you back. I'll let you share your screen so we have that on backstage and have it ready to go. And I had just finished providing my comments on what I think is going to happen in 2026. And are you in a position where you can share your comments on what do you think is going to happen in 2026? Are we going to have a market that's going to go higher, lower, highly volatile? Maybe that's your jumping off point.
Yeah, I'm expecting just continued volatility this next year. I do expect us to end higher.
Mm-hmm.
And I know the one question that I saw was a 10% pullback. Those happen about every 16 to 17 months. So it would not be out of the ordinary to have a 10% pullback, but we are still in a bull market.
So you're thinking we'll have volatility, but from January 1st through December 31st, 2026, we'll end up higher, but getting there might be a little interesting.
Yep.
That's my feeling.
Thinking. Yep. That's exactly what I'm thinking as well.
Volatility is part of the game, right? Like we had a pretty good sell-off here in March, April. Something like that's going to happen again. I don't know that it's going to be that steep. I don't think we have, but like and I'm not a geopolitical analyst here, but I've noticed that there's a little bit of a argument going on between the U.S. and Venezuela. And Venezuela, by the way, if you don't know, owns or has oil reserves that are humongous. And if my memory serves me right, they have, and I'm going to double check this in a bit, the oil reserves in Venezuela are actually bigger. They produce more oil than Saudi Arabia. It's big, humongous. It's a really natural resource wealthy country. They also they have these waterfalls in Venezuela that produce all the hydroelectricity the country needs. And they export electricity to neighboring countries. So they're pretty naturally just rich. They just do really well. Well, the U.S. doesn't agree with I guess their government and is talking about having the U.S. Navy have a blockade with preventing oil from Venezuela, which I believe is currently embargoed by U.S. and its allies. And all that could turn into like a mess. I'm not a geopolitical guy. I'm just looking at it going, that could turn into a mess. What if, China and Russia get on the Venezuela side? Because most definitely they like that Venezuela has all that oil. especially China, who doesn't have a whole lot of oil. And China says, we're best friends with Venezuela, and kind of back them up if there's any kind of argument with the US. They'll probably give us, access to that oil we need to run our country and run our economy and all that good stuff. And they also buy goods from us, right? So China would love to sell their cars and stuff to Venezuela. So all that stuff could definitely be a problem in 2026. Not sure if you're following that, Daryl. I'm not an expert on that stuff, but I did notice it as a story.
Yeah, I've just been reading some of the headlines. I haven't really dug into it from a geopolitical point of view.
Yeah, and not to sound too like cold on it, but if like a country didn't have resources, like there wouldn't be much there, because it's like, well, does it matter? Like, but Venezuela has all that oil, and it's like, yeah, it matters, because countries will go support Venezuela, like China again, or India, which needs oil, or fill in the box, and then it'll become kind of this bigger headache. And the stock market doesn't like conflict. Stock market likes, hey, let's make money. Let's figure out how to make AI make us smarter and do things faster. All right, enough said there. And we'll see when we have a nice sell off. When it does happen, let's take advantage of it. So we're going to move on to Uber and talk about Uber. But before I do that, let me take a look at the market. The market is trading higher, 41%. The Dow is up 43%, 0.43%. S&P up 0.51. NASDAQ up 0.65. Looking good. We're out of the gate. First 10 minutes trading. NVIDIA, nice and green. Broadcom, Micron, hoo-hoo, 2-day rally up about 16%. The whole semiconductor complex is up higher. Uber is under pressure. We're going to talk about Uber next. What's going on with Uberland? What is ailing that stock? And looks like the financials sector is catching a nice little bid here. Banks have been doing well. I own Citigroup. It's been going up nicely. Do you own any banks, Daryl? And are you still with me, Daryl? I'm not sure
Yeah, I
Daryl's
have
got it.
KRE options still open.
Okay. Very good. And just so that you know, your connection is
Can
really,
you hear
really
me?
barely. You might want to test your internet connection and see if you're getting good bandwidth. All right, so industrials. We got some industrials picking up a nice bid. Netflix is having an up day. Healthcare, some stocks are trading higher. The big story around healthcare is, in my mind, is will the U.S. government have those subsidies on healthcare? Because they're supposed to go away on January 1st, 2026. And then a lot of people are going to be met with a very high, expensive health insurance premium for 2026, because there's currently subsidies on health insurance. Those get taken away. I think it's going to put stress on the healthcare industry. But if they get put back in, that risk factor goes away. And I think this space will catch a rally. I'm not sure where it is in the US government, if it's getting voted on and that, but I would like to see that the subsidies restored, uh, because it would help a lot of stocks in this area. We'll see where it goes. Energy. I mentioned Venezuela being in that I don't know if it's a war of words at this point with the US, but that is a major oil producer. Those guys produce a lot of oil. And if that gets taken off the market, oil prices go up. If it continues to produce oil, provide the global market will have plenty of supply. So where that conflict goes is going to affect the oil markets. And it looks like Staples. It's not having a good day. Not having a good day at all. All right. So it looks like there. And Daryl, you with me? It looks like Daryl is frozen, so we'll give him a few minutes to get his internet squared away. All right. So let's move over to Uber. What's going on in Uber land? It has been a stock that's been under pressure, and I'm not sure why. A couple of things that I'll kind of bring into the conversation. As we look at the travel stocks, they're doing really well. Okay. And you have the consumers doing fine in the US. These guys keep growing. I don't see any like structural problem with their business. Now, we're having some new stories around, autonomous driving, but I don't know that that affects them. So I don't know if you guys in the chat know something I don't know around, why is Uber down, but let me ask Gemini. Gemini, why has Uber stock sold off? See if Gemini picks up a story or two where, what's been happening. Uber stock has sold off in recent days due to a combination of mounting regulatory and legal pressures in Europe and the US. A price target cut by Morgan Stanley and news that it's scaling back incentives for electric vehicle drivers. Okay, so there was like a incentive for EVs, huh? Okay. So this whole deceptive billing, huh? Because there's like surge billing, like if you're picking up an Uber when things are really, really congested and crowded, they charge you more. So maybe that's part of the problem there. All right. So that's what's going on. But it's kind of I can't think of like a time when Uber wasn't dealing with some government saying, you guys are too big. You guys are, disrupting the taxi industry. You guys are doing this and that and the other. And it kind of comes with the territory. If you are going to be the biggest in the space, it's almost going to be like a gravity. Your size, since you're the biggest, you're going to attract the most attention, good and bad. And the bad being governments are going to be like, oh, we don't like Uber because it's taken away a bunch of taxi jobs. It's, you fill in the blank. Drivers are complaining. They want to make more money. It's like, okay, got it. Everybody wants to make more money. I live in Southern California, and it's often that you hear in Hollywood that, people that support the movie industry, they're constantly, it seems like one of them is on strike. They want better benefits and money. Got it. That's just kind of the nature of industries. So that's what I'm seeing out there. For me, for this investor, the story on Uber from an investing perspective, my point of view on Uber hasn't changed. Uber, its size really matters. When we talk about moats, competitive advantages, things that make a business really valuable, one of the concepts is its network power. When you become the biggest and you become kind of like the standard, the default way that people will fetch a ride, and it becomes Uber, that's a huge advantage. Huge advantage. That's what Uber has. Nobody's ahead of them. They're the biggest. People, when they need a ride, Uber. I have a 90-year-old mom. She turned 90 yesterday. Awesome. Spent the day with her. I was there with my brother, my sister, close cousin. We had a good time. And she takes Uber. So Uber is like across every age category. People are comfortable with it. It's become a pretty established service. So that's their advantage. Has that changed in the last 3 months? No, I actually think the future looks good. Uber has a strong grasp on the future, is my opinion. And the fundamentals only support that this business is looking good. I mean, we got growth, got accelerating growth. It values really well. I have Uber at a big discount. I own a lot of Uber. I own probably about a 5% position out of my portfolio. It's a pretty good sized position, probably number 5 or 6 biggest position in my portfolio. So I have no worries about Uber. I have been picking up shares. I'm trying to be careful because of 2 things. One, I already own a lot of Uber. Second, I've been trying to buy some concentrated big buys into some stocks that I'm really excited about that are new stocks to my portfolio. I want to build those positions up. So, but I'm still really positive on Uber. Not the first time Uber's been questioned, that there's some risk in the Uber business, but that's my position on it. What do you think, Daryl? What do you think's going on over in Uber land? Is there a big problem that I'm not seeing?
I don't know if there's a big problem, and I apologize for the internet issues. But we are touching a longer term auto support resistance. We've actually trying to break down below that. My next level of support would be right around 72 or so. That would be just above the tariff tantrum lows. So they are struggling a little bit right now. The 50-day is declining. The 200-day is still increasing, but it won't take very many more days below that 200 to start pulling that downward. The 21-day is still declining, and it's been trading below its 5-day moving average for 2 weeks now. The one positive sign I see here is on this pullback. The momentum is not as strong to the downside as it was at this pullback. So even though the price is lower, the momentum is not quite as strong, at least on the RSI. It hasn't broken down into oversold territory yet.
So you're
But
saying that the rate of price decreasing doesn't match the RSI, I guess the negative RSI.
momentum, yeah.
Okay, perfect. Thank you.
And it kind of makes sense if you look at these price changes here, they're not near as drastic as what we saw right here. So the momentum was a lot stronger on this downdraft.
Mm-hmm.
So anyway, I'm still hopeful for Uber, but I'm keeping a close eye on these levels that we're trading at right now to see if it can hold above those, because that is a long time uh, support and resistance line.
Well, it looks
It's
like
been tested.
I think it was Benton that was going to start praying for PayPal, and I might start praying for PayPal. And I don't think we're to the point where we need to start praying for Uber. Uber is putting up terrific numbers. It's like, you know what, um, this this will pass. We'll trade higher on Uber every time they announce earnings. Excuse me. What's great about data? What's great about facts and figures and information that's basically verifiable is that it clears away some of these like noisy stories like, oh, it's having struggles, or it's me, a government is telling them that they have to have fair pricing for its consumer and so forth. Got it. But then it comes in, and if it keeps growing at 20%, I think it kind of clears that noise, if anything, temporarily, and then people get reminded, no, this thing's become massive. Uber is a big company. And at what point are we going to recognize that as investors, right? I already recognize it. I believe I recognize it. And if it keeps growing at 20%, it's adding nearly $10 billion of revenue to its top line. 10 billion. And it's driving like 30% free cash flow on that 10 billion. So every year it's taking $3 billion of cash and putting it in the balance sheet each year. And then next year it's going to be bigger because it keeps compounding. So next year it might be 4 billion. Then the year after that, 5 billion. That's a very desirable business in my book. So I'm good with Uber. I am just fine with Uber. Which super investors own Uber? Let's take a look. See who's in on Uber. Who is a big investor in Uber? So we got 9 big investors, big famous investors. Bill Ackman's probably the most famous investor. He's got a big position, almost $3 billion of Uber stock. David Tepper, he's number 1. Based on like the research I do on these super investors, he's like killing it. He's, low 30% rate of appreciation in 2025. So he knows what he's doing, most definitely. Then this guy, Chase Coleman, he definitely knows what he's doing. Now, he's got a $15 million position. This guy manages a huge portfolio. So it's not a big position, but just knowing that Chase Coleman's got some Uber shares is interesting. I am good with Uber. I am just fine with Uber. We'll let the market do what it does, which is sometimes take a story and run with it. And it's a story that is not really matching the fundamentals. Now, the heat map for the market right now, let's take a peek. NVIDIA up 3%. Micron still rallying higher. The semiconductor is really doing well today. And it looks like semiconductor infrastructure is doing well. We got software stocks that are not keeping up. We've got some bank stocks trading higher, capital markets going higher. Robinhood's up 2%. Robinhood was up a lot yesterday. Netflix is higher. App11's higher. Nice. So this was the triple witching day, right?
Quadruple,
excuse me. I underestimated it. Now, so far, it's like some of these stocks, the volatility's there, but boy, it's they're trading higher.
Yep.
It's early in the trading day, so let's not book these gains just yet. Let's not go over to the Ferrari dealership and put a down payment on a new Ferrari just yet. Let's give this thing a couple hours, because I could totally see this, if anything, just giving up some of the gains, but we'll see. All right, so let's get back into the chat, and then we're going to move to a next stock on our list. And it looks like I left off. Okay, I left off with Mike's comment on E.L.F. Shadow Guy. Good morning. All right. Well, thanks for making the stream, and thanks for putting your notifications on. So let's take a look at Pinterest. I'll put it on the list. Mike's interested in Pinterest. I am curious to see. I got out of Pinterest. That stock was not going with the rest of the pack within communication services. Yeah. Yeah, we'll see, but hopefully it doesn't get ugly because yeah, I hate wars, but we'll see. We'll see. Um, we talked about Nike. That was our first, stock we let off with. Mike, don't forget bricks. Yeah. Yeah, it'll be interesting down there. I learned about Venezuela. I think I've mentioned my first job out of college, which was with an oil company located in Los Angeles. The oil company was by the name of Unical, acquired by Chevron. So that's like my connection to Chevron. And Unical was the Union Oil Company of California a long time ago. And Unical had a joint venture with Venezuela. And that's where Unical got a lot of oil. So the whole reserves in Venezuela, the the reserves, the oil they produce is a good quality of oil. All those things were kind of things that were taught to me, geez, a long time ago, um, by Unical, which was a really good job. I was a staff accountant. I learned a ton there, so much. And got involved with software projects, and then moved on to a pharmaceutical company from there. But I remember the experiences that I had and how the guys that knew the oil business told me about Venezuela. All right, moving down. So, Daryl, I hope your internet becomes more stable. Don't worry about it. We are all dependent on that darn internet. All right, DJ, good to see you, buddy. So yeah, so the stocks definitely that immediately benefit are United Healthcare, Oscar, Molina Health, Elevance, because they're basically when they sell insurance to especially an individual, really an individual person, because like corporations, they pretty much are getting insurance or establishing insurance for its employees. Employees pay a part of it, but it's almost like corporations also subsidize healthcare. And that's the wrong word to use, but they kind of provide it as a benefit to its employees. Um, but it's individuals that when they go buy insurance are like, hey, I'm an entrepreneur and I need to buy health insurance for myself or my family. That's the person that benefits from those subsidies. And they would help the insurance companies, but I think it would help the whole space because if you have everybody's insured, the hospitals get reimbursed. More prescriptions are filled, more pharmaceuticals are consumed because people are using the health network, right? If you have a lot of people that are not insured, they wait till it's like, okay, they have a medical problem that requires an emergency room visit. So the whole system kind of pays the price for having people that are not insured. So we'll see how that plays out. I think the subsidies are going to come back. It's just would be very unpopular if they didn't. Um, yeah. So yeah, Paul, I think on Uber. Yeah, that's what's going on. And the EU, and forgive me for if I'm out of step on this, but the EU tends to go after most big businesses because I know they go after Meta, they've gone after Google, they go after Amazon. It just means, it seems like it's a rotation. Let's go after these big businesses and make sure they're not taking advantage of people. All right, so yeah, it was a happy birthday for my mom. She's awesome. And she's sharp, man. She was still bringing it yesterday. It was awesome telling us stories and it was a good day. All right. So, and if you're not a member and you want me to look at a stock, no big deal. Buy a $5 super chat and we'll have you we'll cover it. All right. Benton in on Uber. Good. Sounds good. And then Mike's in Uber. Good to know. So this is a new member. Zeely, good to see you. Thanks for joining. What's your view on Hood in 2026? Man, I love Robinhood. So Zeely, I put Hood on the list. I'm going to cover it. And it's probably number 3 or 4 on the list. So you'll have to wait a little bit. But I would love to talk about Robinhood, what I'm seeing for 2026. It is a spoiler alert. It has a positive ending. All right. So good Uber use out there. Question for Daryl. Daryl, do you own NTST?
I do not.
All right, there it is. Yeah, I agree. Mark, Uber should be all right. I agree with that statement. I think it's going to be better than all right. I think we're going to wake up someday, maybe 5 years from now. It's going to be $1 trillion business. I really do think that because a lot of things are going to go their way. All right, we covered Uber. I wanted to cover FedEx, and FedEx to me tells me a lot about the economy. And the economy depends now on a lot of delivery, whether it's business to business, business to consumer. And FedEx announced their earnings yesterday. The stock was under pressure. It looks like either the stock analysis website or my internet is dragging a little bit. Let's give this thing a second here. If it doesn't update, I'm going to have to abandon this browser. Let's see if I need to close this. Let me try this. Maybe stock analysis is getting hit with a lot of requests.
FDX is recovering.
Yeah, so it's down 1%. And FedEx and UPS, they tell us how, from a parcel perspective, how much activity do we see out there? When I was looking at their financials, what I found interesting was that FedEx's stock has really gone, down, especially as we look at the sell-off that we saw, most definitely when we had the tariffs, right? Take a look at the 5-year. Overall, 5-year doesn't look all that great. It's up 3%. But the revenue has been fairly stable and growing to some extent. Let's see if I can get this back here. Yeah, here we go. All right, perfect. So when I look at the quarterly, see this growth, I was like, why does the market have the stock under pressure? They're growing by 6.84% in the last quarter, trailing 12 month. They're showing growth. It's a big business, $90 billion. And I thought that was a surprise. When we look at their free cash flow, it is expanding. You see that over time it has expanded, let's say from 3 up to 4.3 billion. They have low gross margins because they're delivering product, and they do about 4.83% free cash flow margin. So I think FedEx is not my choice in the category. I like UPS. I think UPS has a better valuation. And it's always good to know, what are my options within a particular space. FedEx has been sold off. I thought it provided a better price, a better opportunity. And from a market cap perspective, UPS is a little bit bigger in market cap. It's about the same size business, by the way. Interesting. It has been contracting. And it provides the same amount of cash flow. UPS and FedEx have $4.3 billion of free cash flow. Has a little bit better profit margins. And the stock, this is the one that I chose a couple months ago, and it's been working okay since I chose it. Like, I thought, hey, between FedEx and UPS, and I created a video 2-3 months ago. So I went with UPS, and so far so good. But FedEx, I think, is doing all right. There was a big worry that, Amazon continues to do its own deliveries, kind of owning its own supply chain down to delivering the product at people's doorsteps. And that type of volume leaving the FedEx and UPS networks is a pretty good strain on growth for sure. But that's where the stock is trading today. What do you think? And it pays a 2% dividend. I think UPS does pay a nicer dividend at 6.5. What are you seeing for FedEx, Daryl?
Well, the chart has definitely made a little bit of a turnaround because we had a declining 200 day that started declining in about April, and it has bottomed out and is starting to increase. The 50-day is above that, and the 21-day is above that. So you have the moving averages in the proper order, and they are all moving higher. The RSI still looks positive at 62. PPO is in bullish territory. We did have more accumulation earlier in the year. Money flow is negative right now, but the accumulation still looks pretty satisfactory to me. So they're definitely, the chart has definitely changed character and is moving higher at the moment.
All right. And I am updating my valuation on FedEx. And the valuation's improving because their cash flow improved. Wanted to get their balance sheet balances for cash and debt. Okay, and then earnings per share forecast. What is it being forecasted for? And we'll leave that there. That looks okay. So FedEx provides a nice discount and they're about equal. I mean, flip a coin, pick your poison. Which one's going to be the one to ride? I picked UPS. I'm good with that. And if we look at how have these two stocks been trading with one another, that I'd be curious to find that out. So here's FedEx. Let's compare it to UPS. Now, the reason I have stocks like these are lower risk stocks. And it's good to have some lower risk stocks. Look at that. They're just paired up, just flowing with one another. But when we look at the 6 month, you see that UPS is not performing as well. And I think my observation is there's a better opportunity if UPS can revert back to where the FedEx stock is. There's a better gain potential for me, and that's why I went with UPS. The 1 month, they're pretty much in lockstep with one another, and they're both higher. UPS is up about 9%, FedEx up about 8%. So they've been doing well, both of them, over the last 1 month. So we are just going to be fine with UPS and FedEx. All right. So that's what's going on with FedEx. Let's talk a little makeup. I think Mike was in E.L.F. We can look at E.L.F. and see what it's been doing. I don't have a lot of analysis on beauty. Let's see here. Wow, this one really dropped. Now, is this the one that Warren Buffett was in? I think he was in a beauty stock. And so this is a small cap, $4.76 billion. And they have a forward P of 26. Analysts think it's really discounted. This space, to me, outsider looking in, right, is just a lot of competition. And there's always like some kind of celebrity coming out with, hey, I use this new cosmetic company, and Shazam, that cosmetic company takes share away from the existing players. That kind of thing is like not my bag. I'm like, I don't keep up with that stuff. I'm not good at it. So I kind of stay in my lane. I don't really invest in beauty. But this stock, maybe it is going to reward investors. What are analysts thinking about it? 16 analysts cover it. Huge discount. Interesting. And there is growth. Growth expected in 2027. And this is a fiscal year that's about to end. March 31st, 2026 is when this fiscal year is going to end. They're supposed to be growing by 20%, then 17, 14. That's good growth. Very good growth. P ratio coming down to the teens. Okay, pretty good. Let me take a look at their free cash flow yield. See if they cash flow well. So they have 10%. It's good. It's not like awesome, but it's good. And if they're growing and their stock's being really sold off, maybe this is a stock that would be a good idea. Let's see which super investors own this stock. A couple. And okay, I think Warren Buffett owned one. I forgot which one that was in beauty. Do you have any comments on E.L.F?
Now we can look at the chart real quick.
All
I
right.
don't have many comments other than what the chart's telling me. The 50 days declining, it crossed below the 200-day, which is somewhat flat and has been since the 4th of June. The 21-day EMA is declining. The RSI came out of oversold at the end of November, but it's barely above 40 at this point. We did have a bullish crossover in bearish territory back on the 28th of November, and it's underperformed the S&P. I don't know why this is staples. It should be discretionary, I would think, but it says staples. And then what is CM? Personal products. Okay. So it's underperforming that as well, 33%. And that industry group is underperforming the S&P 500. So that's really all I have to say on this one. It's not one that I follow. I didn't even have a chart for it. I had to create one real quick.
Yeah, I don't have a lot either on E.L.F, but Mike is in that stock. Let's move on over to Pinterest. Pinterest is a company a lot like Facebook. Different experience, very image based. And the stock, the thing that kind of I was in Pinterest, it has really good fundamentals, but what discouraged me, concerned me about the stock is I'm a big Meta investor and I've done well with Meta. So it's almost like, hey, if I can find a stock like Reddit or maybe even Pinterest that can really own or excuse me, grow, that might be a good idea. Now, this stock over the 1 month, it's doing okay. Year to date, not so much. When we compare it to Meta, and I'm going to compare it to Reddit. Over, let's see, year to date, Reddit's performing better than these three. Meta is doing okay, but just okay. It should be doing better. It's had a really strong sell off after their last earnings. You see, Pinterest is just lagging over the 6 month. The situation's even worse for Pinterest. It's really lagged where while Reddit's really crushed it. So I owned all three at one time. So Guess which one was the weak puppy that I decided to get rid of that's Pinterest. So I got rid of Pinterest. But when I look at the fundamentals, they look good. They look good. The growth is there, 16.79%. Not the biggest company in the world, but they're growing quite well. And their fundamentals, when we look at the gross margins, are excellent at 80%, profit margins at 49%. I mean, 49% profit margin. That's awesome. Free cash flow margin. So the numbers look ridiculously good, but the market is not buying it. I'm like, I don't get it. Well, I got enough in the space and decided to take it off the portfolio. It's got a really nice discount to it. If it starts to work, I think investors will benefit from Pinterest. But for now, I'm going to stick to these winners right here. Reddit's been really doing well. I'll stick to Reddit. I'll put more capital in Reddit. I've got a ton of capital in Meta, and I have been buying Meta shares, by the way. Ever since it started to sell off over the last couple months, I decided that's an opportunity, and I started buying into Meta. Any thoughts on Pinterest, sir?
So the 200-day had been increasing since May, and it started rolling over in early November. So it is declining at the moment. We had a death cross on about November the 10th. So the 50-day is below the 200-day. And the 21-day is also under the 50-day. So the moving averages are in the wrong order at the moment. The RSI is only around 40, wasn't able to break above 50 here on this last push higher. We are in bearish territory on the PPO, and accumulation is at a 52-week low. So money flow has definitely been the driver of this one for quite some time. It's underperforming the S&P 500 by 24%, underperforming the communications sector by 27%, underperforming its industry group by 37%, while that industry group is outperforming the S&P 500. So that tells me that Google and Meta and others are driving the prices. Not this one. This one's underperforming.
Yeah. And, when we invest in a market of stocks, and like any market, right? If you're shopping for a car and you're like, man, I really like that, Ford F-150. And you're like, great. But, the Chevy dealer across the street has this $20,000 discount on trucks. And you're like, whoa, really? Yeah. So you can get a very comparable Chevy for $20,000 below what the Ford cost. Well, maybe the Chevy is worth considering. And as we look at Pinterest and you look at Reddit, Meta, you have a market of stocks. Which one is going to be the best performer for us? So as I took you guys through my decision process, I'm going to just concentrate into Reddit and Meta within that category. All right. So one of our new members, Zeely, is interested in Robinhood. And the question, how's it setting up for 2026? And I'll talk about some potential opportunities and also what is going to threaten the stock. So I think the story or the business that is getting a lot of attention is their prediction markets business. It's really growing fast. It's interesting. So prediction markets is, and they're using Kalshi as their partner. So I'm going to open up Kalshi. And similar to when Daryl was talking about the options, was it the quadruple witching day? is what we're dealing with today. So investors can buy an option on a stock and say, hey, I think that the Uber stock is priced too low. So I would like to buy some call options. And if the stock goes up 50%, I'm going to make a lot of money over the next 6 months. That's a contract that I'm buying. And somebody is selling me that contract. So there's somebody else that is involved between that person and myself. And I don't know how long have options been around? 100 years? How long?
Yeah, I don't know for sure.
A long time. For sure, they've been around for a long time because I've heard of them for a long time since I started investing. So our friends at Kalshi used the same legal rails to get prediction markets legalized. And some states tried to prevent Kalshi from operating. They were like, you can't do that unless you want to ban trading options on stocks, because we're using the same concepts, same legal position or legal footing as trading options. So they won in court and the states can't do anything about it. Where I think it's going to grow is today you can, like, something that might or may not interest you is, will Trump release any of the Epstein files? And here's what people are like betting on. You can bet on a topic like that. You can bet on sports. Who's going to win the college football championship? But it's going beyond this, which is going to be, the Oscars, and just go to just about anything that people would be interested in predicting, talking about, and so forth. And back to Robinhood. Robinhood is providing that type of, experience, ability to do that. When you talk about investing, right, we are all rationalizing and analyzing and making our best estimates on stocks, and then taking a position, making our bets, and depending on sentiment, investing the levels that we feel we should invest. And I think especially the younger investor, they probably look at things that they have specialization in and want to also take the same type of risk and buy these contracts. Robinhood is growing this part of their business really, really fast. So now Robinhood is probably the fastest growing brokerage business, and it's a crypto brokerage as well, an exchange for crypto that's doing really well. They have prediction markets. They have a credit card to compete against, the credit card companies. So they have just a really good playbook going into 2026. Is the stock going to perform like it's performed this year? I'm going to say no, because can you go up by 224%? Probably not. If I may dare say, Robinhood, I expect is going to be priced higher at the end of 2026, but it's not going to go up 200%. It's going to go up, I don't know, 10 to 30, 40%. I think it's a really good business for me to have, because I really like that they're really addressing the things that are really interesting to a good portion of investors. And I really do like that their market share of investors tend to be the younger audience, because today a 25-year-old might have a net worth of, I don't know, $25,000, $50,000. I'm just guessing there. But that 25-year-old in 10 years, they work professionally, they work hard, they put their money away, compounds, and they wake up and they have a net worth of $200,000. Well, Robinhood owns that market. It's a really nice growth area for Robinhood. Whereas I think the more legacy, historic brokerages, let's pick on Charles Schwab. I love Charles Schwab. I think Charles Schwab's cool. But Charles Schwab might have older investors. That older investor stopped working. Maybe that investor is 60 years old, stopped working, not generating any more income from their career, and now they're consuming some of their capital, and that clientele isn't going to grow very fast. There isn't going to grow their assets very, very fast. They're probably pretty set in their ways on what they invest in. They're an ETF investor and so forth. So just the clientele that Robinhood has is far more dynamic. It's a clientele they can sell more products to. And it really makes Charles Schwab and that era of brokerages very vulnerable because those businesses are not very exciting. They're just they're stale. And some of the symptoms that I'm seeing with the older brokerages is 3, 5 years ago, they all badmouthed crypto. Oh, crypto's terrible, horrible. Nobody should touch it. Today, all of them have crypto ETFs. They all joined the party and kind of ate their words and got into the market, showing that the investing community, not everybody, but a good number of them, want to invest in crypto. And who's to say somebody shouldn't invest in crypto? Who's to say somebody shouldn't buy Micron stock? It's these are all decisions people should make for themselves. And Robinhood's just really leading the charge there. So their whole business, how they go about things, that's what really separated them from the pack when I started investing in them. They continue to be that company. Just a really, really solid, for me, within financials, within financial services. Robinhood reminds me of like a Google, reminds me of like a Meta, which they're constantly trying to get bigger, better, more relevant, more important. And they're doing it in spaces that are very organic. These are new spaces like prediction markets. Prediction markets were like, they didn't exist 10 years ago. Now they're a thing, and the thing is working, and it's growing. And Robinhood has a front row seat to prediction markets. So 2026, I think, is going to be a good year. I still think Robinhood's discounted. Even after all those gains, Robinhood, in my mind and in my analysis, is discounted because of its cash flows, because of its rate of growth, because of its profitability. All those things line up. I'm not buying any more shares just because it's become too big in my portfolio. Not too big. It could be as big as it wants to be. But it represents like a 7% position in my portfolio. That's a big position for a new player in the stock market. But as I look at the company, I'm very comfortable owning their shares. And those are my comments on Robinhood. Do you want to comment on Robinhood, Daryl?
Yeah, the chart looks really good. We've looked at this one before, and we drew a trend channel that really started at the end of 2023. And it just rides within this channel. May bounce out of it a little bit, but tends to get right back in the channel and travel up to the top. We can see that it's currently getting close to the bottom of the channel. So you know what that means. Get your finger ready. The RSI is holding 40 right now. The PPO is in bearish territory. Look at that accumulation. 52-week high pretty much. Maybe it was a little higher in October. It spends most of its time in positive money flow. Well, outperformed the S&P by 725% over 3 years. Financials, 759% over 3 years. So, looking pretty amazing to me. I'll go down to 1 year and see what we see. The 50-day is downward sloping at the moment. 21-day is downward sloping and below the 50-day. The 200-day is still upward sloping and below this bottom trend line here. So even if it did break out, you can see that it acted as support even during the tariff tantrum. It found support at the 200-day. So if it does break down below this trend line, that's about as far as I would expect it to go. So it looks really good to me, and looks like it's getting to a spot where it would be the right place to start looking at some shares, picking up some shares or adding.
Yep. So good stuff, Daryl. And I think your question is the magical question is like, what's the right price to start a position on, right? So strategically, I shared with you my sentiment on Robinhood. I'm very, very bullish on it. And it has had a pullback recently. And the ideal, points to buy this stock is on these pullbacks, right? If you just buy the pullbacks on Robinhood, you'd be doing quite well. So you pick when you want to invest, but it's a really good business. It's set to go long term. It should be a more valuable company. It has growth to do that. And how you invest, if you're a dollar cost average investor, like I am, I tend to pick these points when a stock is under pressure, especially when you have these general sell offs. Those are great for me because I could just buy stocks when they're selling off. The market's just selling for the sake of selling. But then I can buy, at certain points along the way. So I think an example that I'll use is a stock that I've been buying more recently is Regeneron. So as I look at Regeneron, it's been under pressure. It's beginning to really work. Obviously, buying here would have been genius. I did not do that, but I started to buy here, right? Buying into a stock when it's really been under pressure is my game. And I like the fundamentals behind Regeneron. I think it's worth a lot more. I think it's going to be worth a lot more in the future. And then I try to buy a good number of shares on these down days, on these down periods, especially like this one here showed. It had a really nice down period. And those that bought Regeneron here are up 58%. So that's how I try to go about it. Regeneron's a new position in my portfolio that I'm adding shares in. Great to have you as part of the channel, Zeely. Please keep coming back. Please keep asking about which stocks you find interesting. And thanks for being a member. Thanks for all members for being members. All right, so let me catch up on chat here. So I think it's Boba Plays. If you want us to look at QS, glad to just buy a $5 super chat or become a member. And then Mike, you got out of E.L.F. Nice. Buffett owned Ulta. He owned a beauty. And, Buffett, some of the Buffett principles he has, I kind of just jokingly would say he kind of violates some of those when he buys a beauty company. That's just me. Zealy, great to have you, man. Thanks for joining. It's great to see, like, especially all members ask for stocks to be reviewed because that's what it's about. Is it's about research and it's about you know as you look at stocks that you're looking to invest in, it's good to have a sounding board and hear what other people are seeing in that particular stock. And that's what I hope you guys are getting out of it is you're interested in the stock, you see two other perspectives on it, one being primarily fundamental in my case, and then Daryl bringing in the charts. I really like this format. I hope you guys find it valuable. All right, so we've got the heat map going on here on quadruple. Excuse me, I keep getting that wrong. Quadruple witching day. Looks like Nvidia is dealing with it quite well. We're 1 hour into trading, and Nvidia is higher. Palantir's higher. Google's higher. Okay, and what's been an interesting twist. Didn't expect this. Google is the biggest position I have in my portfolio. It's the biggest one now. And January 1st, 2025, I knew they had a semiconductor. I knew that they designed, but a lot of businesses do. If you think about Amazon, they have designed their own semiconductors. And who else is in a good example? Apple, right? They kind of designed semiconductors for their iPhones. So I knew their semiconductor was out there. More recently, it's become kind of a whoa. Well, as we get into the inference phase of AI, is Google going to have that as a competitive advantage? Yeah, you could say that, but it's always been there. And I think Amazon has the same thing in their cloud infrastructure business. And I don't know about Microsoft, but I know Amazon does have semiconductors that it's created over time that handle specific workloads within their AWS business. So that was a surprise this year that I was like, well, it's a positive surprise, but the market's really treating that like it's new. It's not. They've been doing that for 5 years. So something I'll point out there. All right. So we covered all these stocks except for one that I mentioned earlier. Actually, two of them, but we're only going to cover one. And that is Micron. So Micron's, wow, look at that. It jumped up. Its earnings were fabulous. And then it went up another 6%. And Micron is a $297 billion market cap company. It really rose in value. Now, this one here, this is one that is a stock that I'm going to say I wouldn't be surprised if it's back to $100 a share in 2027, 2028. And the reason for it is this is really a cyclical business, and it really shows it in its financials. In 2018, it grew by 49%, and then it contracted by 23%. Then it contracted some more. Then it grew. Then it contracted. And then it grew. And it's like, wow, man, everybody's excited about this growth. But the growth, even when you look at the forecast, it's expected that it's going to stop. And right now, in a way, the data center build out is really, really going. It's really heated up. It's firing on all 8 cylinders, but not too far into the future. It's going to start to slow down. Well, is the stock price going to stay here? I don't think so. This is like, oh, it's going to keep growing at 50%. And it's not. So this one here is one that I would probably say in 2 years, if we came back to this stock, it'd probably be trading down quite a bit. Micron, it's having a great day. I think, and the The one thing about Micron too that is an important thing to keep an eye on is they are not the leader in their space. The number one player is HK Hynix. They do memory. And all these three companies are really busy trying to fill demand of that data center. But you got some really big competitors. And these guys will compete against Micron. And last point that I make on Micron is their margins have improved, but certain years their margins have been terrible. See, here's our margins. Here's where competition shows up. The years that I showed were contractions. The competition was so intense that their margins really go down. And now they're enjoying better margins, but they're not great like NVIDIA. And then their free cash flow is okay this year, but it's just okay. In some years, it's terrible. So this business here is like, I think, a risky one. But that's why I don't invest in it. And those are my comments on Micron. What do you think about Micron, Daryl?
So they have really had a nice run since the 4th of September. And the price range you mentioned, $100 or so, is pretty much where the long-term support and resistance line sits. So they're running quite a bit above that long-term support resistance line. The all the moving averages, the 5-day, the 21-day, 50-day, and the 200-day are all in the correct order and are rising. They did have a sell-off going into their earnings, but quickly recovered after that. In a previous video, we talked about the bearish negative divergence. So you have higher prices, but with each subsequent push to a higher price, your momentum is less and less. And at some point, this will break and you'll see a downturn in the prices. But today is not that day. The RSI on the last push higher got to about 65, so it didn't quite make it to the 70 line. Came down, stayed above the 40 line, and is right at the 60 line at the moment, just above it. So we'll see if it can at least break this downtrend line or whether it stays with that trend line. And we'll just watch and see what happens. Looks like we may be having a bullish crossover in bullish territory, but I do see it's in distribution mode right now. So we'll see how the money flow is today and the accumulation is today.
Excellent. Thanks, Daryl. All right. So as we wind down, Daryl, anything going on with your channel that you wanted to let people know about?
I'm just researching this week. I got a video that I'm going to be working on either today or tomorrow. So you'll be probably seeing that posted here shortly, but nothing else than that.
All right. Sounds good. And with regards to my channel, I am working on a video that is going to look at the industries and sectors that are set up to do well in 2026. Probably, I don't know if I'm halfway done with my research or a little more, but I'll probably be cranking that out this weekend. I'll release it out to paid members and then to the public in about 30 days after it goes out to paid members. 2026 should be a good year. This year has been fantastic. I think the individual investor, the retail investor, you, me, Daryl, we're the ones that continue to get, I think, more informed, better at what we do, and more empowered to really drive our portfolios to succeed. And that's really exciting. And really glad that I've put in the time over the years to, get a knowledge base and an ability to drive a performance in my portfolio because it's set me up, set my family up, and it's been a lot of fun. It'd be great to do the same thing we did this year, next year with regards to the channel. And I really appreciate you, Daryl. Really appreciate what you bring to these streams. And hopefully we can do that in 2026 and for the remainder of 2025. If you're a member, thank you so much for being a paid member. And if you're not, consider being a member. You can see all the details on the home screen of my channel, and you can get that information there. With that, let me wish you guys a nice day. I hope the stock market keeps the gains that we were seeing and kind of drives a little bit of appreciation for all of us. Hope you have a nice weekend, and I'll be streaming next week. I'll figure out what's going to work for Daryl because we have, I think, a holiday next week. And then the week after, we're going to have a holiday. So we'll have to navigate around those days when we will probably be spending time with family. And we will stream when we can. I'll be streaming individually in the evenings as well. And I'll try to publish that a little early for the next couple of weeks. And most definitely the feedback that I got on having a stream on what the outlook for 2026 and what themes are going to work, I think that's a really good idea. And I am working on a video to do some research in that topic. And I'll probably be able to host a stream that covers that. And I'll see when it'd be logical to position, maybe around the New Year's. That'd be fun to do a marathon stream. And maybe as we wind down 2025, that would be a fun live stream to host. So that is it. Everybody, have a terrific day. Thanks so much for joining our stream.
Take care, everyone.